And to the equities market now, the bearish trend in Nigeria's equities market persisted on Thursday as the section ended lower by 1.04%, the fourth consecutive decline this week, less than a month after hitting 30 trillion naira in market capitalization. The Nigerian Exchange Limited has suffered about 313 billion naira loss to dip to 29.91 trillion naira. The same way, the market capitalization also declined there. Looking at the all share index dropping by 574.59 basis points to settle at 54,915.61. Now, if you look at the week to date growth now, the market has decreased by 1.58%, while this month it has dropped by 1.6%. At the close of trading session Thursday, the equities market year-to-date dropped to 7.18%, and in terms of exchanges, a total of 137.28 million volume of shares with worth about 1.5 billion were traded in about 3,000 deals there. Okay, let's get talking now. Ambrose Omodian, Chief Research Officer, Investor Consulting Limited, joins me here now. Good to have you here, Ambrose. Yeah. Looks like I mean the markets, the prediction that were put out there, it's coming to pass now. Looks like you're having a major pullback, 1.04% drop on Thursday.
Yeah, if you say major pullback, I would say you are not wrong, but I'll tell you, this just say for me, see correction, and yes, correction is expected after market have hit almost 16 to 17 years high, and correcting is expected because when it corrects at this point, in the midst of price being adjusted for dividend, we have seen the the outcome of the the treasury bill option. We have seen the inflation figure. As investors are digesting all this data, looking forward to see the outcome of a MPC meeting. I believe that at the end of the day, we'll see market breathing out from this trend. Why? That says so that more companies are yet to release their audited account. The one that have been marking down now account to dividend is those early filers. There are just about 12 out of almost 86 active companies on the exchange. 12 are not released a result. That means we have more results to expect in the market. That means it is the state of those numbers we're expecting. Actually, investors should not panic because they've seen unaudited account of this company and know their financial strength as regard to pointing towards whether they will pay dividends or not. That means for me, it is not time to purpose. A pullback is for us traders that happy now that market is coming down so that we can buy low and sell high. Like I told you at the beginning of that, for investors, we're not looking at whether the price is going down. Well, as it comes down now, it's better for you to buy more so that I can get more dividend at the end of the day. For trader, we're looking at to see where the market is going to a strong support level on that kind of opinion. You saw what happened in a UK recently when the markdown, pulled back. But this morning, we're seeing life coming back to that stock because what people are saying that if they were expected to see this company first quarter result in the month of April, already at this today night, I put back to around 10. People are jumping this morning. I think that the price started to rebound back again. It tells you that investors in the market have become more savvy in terms of knowledge, and that's why I'm not shaking at all.
But beyond the fact, beyond the assurances that let investors. This is time for investors to to take position. But people want to know why you will have a market drop by about 313 billion in just one day. That's 1.04%.
Look at the major movement in that is just those high cap stocks, and I told you that that the one that push price up and down. How many investors are in those high cap stocks? For example, the life of MTN. MTN lost about 5%, but that's why the market is in that situation. If not, consider that there was kind of a beta slightly in banking stock. In the morning, we saw the banking stock losing rapidly, but in the afternoon, it's coming back again. Why? Because also, outside the shop of Nigeria, because of that contagious fear I told you earlier, I think that all those markets are started, their government and their federal bank are intervening. For that, I see.
So it's not because the market is reacting to a particular, negative, news or what is about to happen, or maybe the inflation figure, or maybe the election fear.
No.
Okay, that is.
It's just that I call it contagious fear. So because of generally anywhere in the world, the banking sector is in any room. When you see banking sector shaking, it's a sign of recession. If not taking care or if not addressed on time. But the good is that we saw a quick reaction. We saw the banks, central bank federal economy and their government stepping in to correct this thing, because I tell you that what we saw in this bank are not like what we saw in 2008, where we have a financial meltdown. We have this what's it called, Liverpool going on down, those that trigger 2008 financial meltdown. But no, I that this one has been corrected easily, immediately, to show that other banks are support. For me, it's a lesson for also to central banks. But the good thing is that...
But can we say the shaking, I mean, this shaking is as a result of the impact of the American bank's failure, the like of Silicon Valley Bank and Signature Bank and all of that. But, I mean, fundamentally, we have a strong structure here. So I'm just wondering, the connection.
I say it's just fair because when you have a economic crisis or financial fear, it's going to flow above your domain, your territory,
right?
Whether international or domestic, or even from sector to sector or industry to industry. In the that's why I think, for me, MTN has paid 10 naira dividend. By next week we'll present the mark down, like today now they're marking down Nigeria. Right. For me, this is what driving the price. For me, investors should not always tell you that if you know what you're doing in the market. I've told you that this is investors market. Now we are seeing a pullback. For those that are investors, they should smile. Why? Because so that you can buy now cannot double. We also increase your dividend there. For we traders, still market correcting also, we're also smiling because that one people is a strong point to position. Because at the end of the day, you know that no matter what happens, market will not continue to go down, market will not continue to go up. There's always a support level. Market will get to a rebound back. Also, a strong level that you get to at the top, it will start coming down. And when we say that market was kind of start trending for almost more than 5 trading days before we saw this pullback. For me, there's no cost.
All right, let's just quickly take a moment of break, and when we return, of course, we'll come and wrap up. It's still Business Breakfast. To be back in a moment, please stay with us. Thank you for joining us now. Yes, Ambrose Amorian, Chief Research Officer, Invested Consulting, is still here. So before we went on break, I wanted to ask you, yes, market is, experiencing a pullback already. Investors are taking position. We're having,
people are taking profit.
Yes, we are taking also profit as well. We also expect,
a rebound.
The tier 1 banks are supposed to also release. So these are some of the numbers but again, let's look at inflation figures. They are here. They are gone. I mean, one will still want to take that into consideration as well. But ahead of the MPC meeting, is what a lot of people like to consider. Yes, even though you need to play or walk around this figure, understand this figure to be able to take position, but there's a major key, event that is upcoming that will also, impact the market as well. So, what do you think will be the mood of the market going in that expectation, anticipation of that, key event?
Yeah, actually, from the strength of the, let me start from the data I've seen so far. Right. On the strength of the February, MPR, we saw this position market index that dropped below 50. A signal contraction on the economy, business activities have slowed down. That is one. Two, we have seen the figure for inflation, consumer price index for the month of February. Yeah, we saw an inch, not just much. To show you that yes, because of cash crunch, you can see the impact compared to the movement from 21.34 to 21.82, but now you can see that just 21.82 to 9.1. Tells you that just about 0.09 increase. Tells you that the impact of that country have already reflected, even though we expect that it's going to slow down. But on that note, don't forget that the role of monetary policy anywhere in the world, central bank is just to work for price stability. That is their key. Right. And now that inflation is up, for them to stabilize price, they use interest rate. And because our own environment is peculiar, we have seen that it is not just looking at the interest rate alone. And that is why they've stylishly going to Naira design. And now we have seen that able to mop up almost like a 2.3 or 2.4 trillion out from the economy back to the system. That also has the worth going to reflect in the going to the future. But now that MPC is around the corner, what I expect them to do now? For me, we are doing all this. We have seen data that have shown that the economy is slowing down. It's also a warning. But if it's not taken, we might slip to recession, not immediately, that's toward the end of the year. Or we are seeing another decline in Q1, which we're going to expect. But if you continue to see a decline in your GDP, so that your economy becoming more fragile, anything can happen and throw into recession. On that note, since they are the one that manage the economy with all these their two months meeting to stay where the economy is going, I believe that at this point, because that as we speak, the cash is not available, even when the old naira and the new naira
are going to be spent together.
We are not seeing much in the system, and the business in the system has slowed down. And for you to kind of retrieve or trigger this system or kind of add a kind of fuel it up, you need to make sure that interest rate is not further increased. Why? If further increase, the cost of fund will increase. It also tightens the space. For me, it's now done on the committee. Either you have just a moderate hike or you leave the interest rate unchanged.
Right.
Why I say because if you saw what happened in ECB yesterday, that is the European Central Bank. Yes, they had their inflation declining. Still, they went ahead to increase the 50 basic point. That's why that a bank in that domain also has issue. See that most times, see all these central banks, they give deaf ear to something, but since that they've intervened to that bank, in the bank, that's why they might likely not to.
But there's also a lifeline going on for some of the banks who are experiencing crisis as well. From the Swiss credit bank.
If you are intervening in those banks, then don't forget that as you are hacking rates, you are automatically hitting this bank back again, because non-performing loan will also be increasing because cost of finance, cost of borrowing is high. And people on that note, as I said, if we saw them doing that yesterday, I believe that the same Fed will do the same by next week, Monday, Wednesday, they are having their own meeting. But here we're having our own Monday and Tuesday. I believe that to follow, I believe that this is what is happening globally now.
Right.
We might see a moderate, not 100 basic points we have seen the previous two MPC meetings. We might see that 25 or 50, but I'm taking 25. But for you can this committee, they can fund it and they can make it 50 just to reduce by 50 basic points. That is okay. But I believe that this is not time to increase rate at all, because the economy has given us sign that things are not well, because we are seeing a slowdown in the system. If you increase rate, you further will hasten that slowdown in the system. That means the cost of borrowing will be high. For me, I think this time for them to either leave it on change, or, like I said, moderate.
But with the picture you've painted, is that the expectation of the market? I mean, investors who are sitting to watch,
these are the investors, because
and if that is the situation, so how is the market likely to react to the unlikeliness of the CBN to perhaps maintain what it is, or perhaps maybe reduce it by 50 basis points. So if you reduce by 50 basis points, you're going to have about 17%.
Yeah.
So
that's about 18%.
Yes. 17.5%.
That will give you 18%.
Okay. So, but if it's reduced, I mean, of course,
so if you left for change too. For me, the good thing is that if it is reduced by 50 basis points or less or change, the market will be in for you. That will be good for the stock market. But if there is increase of 50 basis points to 80, yes, because it's any season, market might try to but it will have a way, because that will also make fixed income market more attractive. Or if they leave it unchanged, and don't forget that what we are seeing in the treasury market and also bond market is also competing with the equity market because of rate. But the good thing is that inflation has put most of these fixed income markets not on a red return at the end of the day, because their real return is because they are below what inflation. While stock market, there are some stocks that already have made 20% with their dividend yield almost around 30%. These are what we are looking at. That is why even though they increase it to 18, some sector will still be attractive. Especially, as I said earlier, that we have not seen the First Bank results. And the price polling bank now, their yield has gone to almost two-digit return on their yield. Right. This makes it more attractive. That's why I say when it's polling down now, it's make it easier for the investor to because that's why when the bank put us back at around 30 kobo, the market volume on it immediately, because it's attractive. If a bank we are trying to pay either 280 or 3 naira, you are seeing selling for 20 naira, you almost more have than 12% dividend yield, which is almost higher what you are seeing in the fixed income market. And the period for you to get that is very short. In the market already, you can see that UCAP just announced the same match. They're going to do the AGM the same match. You're going to get your money the same match. For me, it's a good one for investors to understand all these dates when investing too.
A good one for investors. Okay, so let's wrap up with these. Perhaps maybe from next week we may start looking at sectors that it's likely to drive the market going forward. Looking at the fact that the market is at a level where investors are taking advantage.
The market is waiting for a catalyst or a trigger. Let me do that because one, we mentioned it earlier. The engine of the economy, which is banking sector, we have not seen. And also, don't forget that the CBN governor in their meeting in South Africa mentioned something. He said all the central banks in Africa should tighten their regulation to make sure that our banks will not experience what we are seeing in developed economy. For me, it tells you that he understands. That is why in the coming MPC meeting, I'll tell you that in that communication,
they probably want to factor all of that into
communication. That communication need to tell us how healthy is our bank. And that's what investors are looking at. But I tell you that from the statistics we are seeing, look at our bank capital adequacy, they are okay. Look at our bank cash ratio, all of them are ready. For me, that's why I said, look at their balance sheet, they are robust. For me, our banks are okay. That's why I said investors should not
But
panic.
you also need to look at their, the loans, their loan books, whether non-performing loans and all of that. You also need to factor it, as well into conversation.
The banks, as we speak now in Nigeria, I will tell you that if I will say kudos to them in terms of risk management, they understand that these are affected them before now. You learn from your mistakes. You know that when of them were giving loan to the oil sector, when oil sector was hit, they were all trying to casting for air, because they know that when you are exposed to a particular sector, it becomes dangerous. Down they have put a lot of risks to manage all this. That on the end of the day, it becomes good. For me, if you look at how First Holding Bank has improved from from almost 23, now it has gone down as almost as 6 or 8 now. Tells that and this is a bank that have paid almost like 210 billion as a non-performing loan previous years, and the bank is still operating. Say that our banks are solid. But I believe that at the meeting that is coming on Monday, Tuesday, the last day we expect the CBN governor to tell us briefly the state of the banks in Nigeria, so that will also boost confidence for investors. Interesting. So let's wrap it up now. What do we expect today? What is likely to happen today? Are we likely to see the market, continue on that negative trend? We saw yesterday, Thursday, or it's likely to have a change? No, I see the market. The rate of pullback will slow down definitely, and that means we expect to see a mixed trend today. For almost 5 trading days, we have seen market on the red. On Friday last week till Thursday, that is 5 trade. The market in red. That also create opportunity for new entering position for design investors. For that, there's no cost for allowance. But don't forget that all eyes on what MPC meeting outcome. Once that is, and also Saturday elections on that, and once we put all the election season out, now that we are looking at the coming of new government, and also what it take between now and the 60 days for the tribunals to handle all the litigation. Yes. Once that is done, we'll see a new direction. Let's leave it there. Thank you so much for your time, Ambrose Amodion, Chief Research Officer, Investor Consulting. We appreciate you for sharing your thoughts with us. You're still watching Business Breakfast. We're broadcasting live from our studios here. So still to come after the break. Nigerian banks have begun cutting the amount of dollars for personal travel allowance, otherwise called PTA, and business travel allowance, BTA, by 50%. So we'll take a look at the impact and effect of that on the economy in a moment. So please stay with us.